All right, everybody. My name is Haysoos. I'm coming with you today to teach you a little bit of difference between market executions and try to put in buy stops and sell stops to protect your profits along the way using the Harmonic scanners and to help you along your path to growing that account within the 90 days. All right, so we're going to start off with the first slide. So just giving you the quick difference between a buy stop and a buy limit order, and we'll go over the sells as well too. So a buy stop order is pretty much what we want to do is when we want to place a pending order that's going in the same direction as the market is actually going. So right now, this is an example here. So this is the current market price. If we want to put a buy stop order, it would have to be above the current market price. So it's got to be going in the same direction that we want the actual buy to occur. When you guys see the buy limits, which you'll probably see a lot from the swipe trades and everything as well too, is basically what they try to do is they want the market to swing downwards to then come back up. So a limit is pretty much you want it to go below the current market pricing and then come back up, so that way it executes it, it activates, and that way you start seeing your profit. The buy stop is the main one that I'm going over to show you guys with the Harmonic scanner, because this one right here will be a little more beneficial as you'll learn to see the entry zones, and you can put in a sell or buy stop order, and that way you can actually collect your 10 pips or up to the take profit one, however you want, in a better way other than performing market executions. So sell stop and sell limit orders are pretty much the opposite way. Same thing as you see here in the example. Current market price. If we want to do a sell stop order, we want to do it below the current market value price because we want to put it in the order where the actual price is actually going to be going. So we want it to continue to go down. So we would put a sell stop order here, so saying that as soon as it hits here, it will go ahead and activate it already for us, and then it will shoot down to our take profits, either the 10 pips or whatever you are looking to try to achieve that day. Sell limits are the same thing as the we explained with the buy limits as well too. Is basically we're looking for the market to actually come up and then swing back down to a lower level. So the sell limits will be placed above the current market pricing. So we want that swing trade to occur to come back down and then activate that order. So that's why you see a lot of, like I said, you'll see a lot of these limits more with the swipe trades because they're putting in swing trades. But we're gonna focus on stop orders for the Harmonic scanner because that's what we want to do. We want to put these orders in as the market is going that way, and that way we can get our quick take profits and get out on profit. All right. So here's a first example. So this is a screenshot based off of the MetaTrader 4 JAFX broker account with the Harmonic scanner built into it. So this is the first example I want to show you of a sell stop order that we placed. So as you see here, it broke its minimum entry and it broke the maximum entry right here. So once this candlestick you see here within that hour broke this entry, I went ahead and I put in my sell stop order down here at this minimal entry. You can see it down for 1.92790, and then I put my take profit 1. So this is a perfect example that shows you this is we want to place the sell stop order in the way that the market is going. So we want it to go back down. We're not looking for a swing trade for it to come back up or anything. We want the market to go down, collect our take profit, and get out. So this is right here when you see it break the entry zone here, you would put a stop order right within this candlestick when it's above that zone. So that way when it comes back down, it automatically executes it for you and it goes into the take profit. So this is a prime example here of a sell stop. And right here, this is an actual after results action. So you see here, we had put our sell stop here at the entry. And this is an example about 2-3 hours afterwards where it played in the entry zone. Boom, it activated an order and we went ahead and got take profit 1, and it continued to drop down afterwards as well. So here's an example of a buy stop on this here. So you see the same thing. It created our entry zone right here. You see off the MetaTrader 4, it gave us our minimum entry and our maximum entry. So you see this candlestick broke and the market current prices within that entry zone. So with this, I would have put a buy stop entry here at the minimum zone and take profit 1, or like we're trying to do within the 90 days, you can put your 10 pips right within this zone. So you're looking at 100 points past your minimum entry. So you have, it's your choice of what you want to do, whether you're going for the 90-day goal, or if you're trying to just go to take profit 1. I'm just giving you examples to show you how to actually execute and put in buy stops and sell stops to help you, instead of doing market executions, which you could actually lose more profit if it hits a stop loss as well too. This kind of gives us a better zone, a better way of waiting for the market to pull back, let it do its retracement, and then come back up the way we wanted to, activate our entries, and then get our take profits and get out. So here's a prime example of a buy stop where we would take it. All right, so this is the Harmonic scanner based off the web version. Wanted to give you an example. So this is one of the prime examples that I wanted to show of why I would rather do stops than market executions. Normally, how they explain on some of the videos, once you hit that first entry zone here, a lot of people rush into these trades. They do a market execution saying, okay, it's going to come back down, so let's sell now within the entry. And as you can see here from example, a few hours later, it actually came all the way back up, and it took the stop loss if you would have took that with the market execution before it actually dropped down. So right here within the entry zone is an example why I would have put a sell stop at the minimum entry instead of doing a market execution. So that way, as you see here, it would have hit the stop loss, but it has potential to still come back down, pull back into the reentry, and drop down to our take profit 1. And if we see down the line, if we check back on it later on and the market continues to rise, then there's no harm, no foul. You didn't lose any profits, you didn't lose any money, and you can go ahead and delete your order and move on to the next one. So this is a prime example why I don't like to jump into market executions, and why I like to really use those buy and sell stops to let the market do its thing, do its retracement, and come back down the way we want it to see. All right, so here is a good example showing you of the entry zone. So this is what you're going to see a lot, whether it's in the web scanner here as an example, or in the JAFX MetaTrader 4. You're going to most likely, almost on all the trades, see 2 entry zones. You're going to see a high and a low, minimum and maximum entry zone. So this is your prime key that you want it to play out. This is where the market is either going to break, or it's going to come back down to either retrace down the way the scanners say it's going to, or it could go up and hit our stop loss and continue to go the opposite way. So this is another prime example of a sell stop, where you would put in a sell stop at the minimum entry. You can actually do the stop loss here. This would be your stop loss numbers, or you can do 30 pips, which would be about 300 points from the minimum entry. That could be up to you, but I know from the 90-day challenge, we're going to go ahead and use the stop loss that they give us, just to kind of give us that window in case it retraces to come back up. So I would put in about a sell stop here at the minimum entry, take your 10 pip take profit, or you could actually put in down here to take profit 1. That's up to you. So this is what we're looking for. This is one of the key things right here we're looking for as a good entry, and put in a stop zones instead of market execution. So that way we give the market time to come down, retrace back, and actually see if it's going to head the way that we need to in order to get our profits. All right. All right, so there are going to be a few that pop up on both scanners that sometimes it will not show you a minimum and maximum entry. Sometimes it just needs enough to break that minimum entry, and then it could retrace back down. Me personally, I do not get into these trades. I like to see 2 entry zones, so that way I can see exactly what window I am playing with. But for those of you who want to still try to get those quick 10 profits and see if the market wants to go the route that you want it to make some money, then this would be my recommendation here. If you want to kind of get into these trades and orders, I would put a stop, whether it be a buy or sell stop, somewhere in between that entry zone and that take profit, whether it be going for the sell or going for the buy. This is a good example here where if it broke it here and we're saying, okay, well, we're not seeing it go any higher, it could come back down already now, then I still wouldn't get into a market execution. I would still put a sell stop entry, because I would like to see the market come back down. And if it decides to do that and activate, then I caught a quick 10 pips, or as you can see from this example, it actually took all drop down 3 take profits. So this was a good example out of here where, like I said, it didn't show the 2 entry points, but it's still, the scanner still won and took the trades. And this was another good profit day right here. All right, so like I said, I don't want to overwhelm. I wanted to keep it simple and short. You can go back into the PowerPoint presentation, look at the slides for the examples on both the limits and the stops as well too if you need to. Basically, the key things that we learned out of this is the difference between stops and limits for your entries now. You know now putting a stop is putting it either above or below. Basically, we want to, you put those orders in the way the market is actually going to go, whether we're buying or we're selling at that time. Again, my preferences are why I like to use execute stops over market execution is just to protect my profits more. I don't like to jump into a trade unless I know the market's kind of swinging that way and I can protect my profits a little bit more other than kind of taking a lot of stomp outs, and I have a lot of open orders at that same time. We also went over learning to read the entry zones. So now you see what the scanner shows you a little bit between the minimum and maximum entries. Those are the key ones you want to kind of look into to get into the buys or the sells. Look at those zones, see how the market plays out, put your stop orders in, and then put your take profits in and let the market ride out. Like I said, it's an 80% win rate in the market. You're not going to win them all, but with the scanner, I mean, it's a really good winning percentage here. And with that, I mean, you guys can make a lot of money off of this. This is just teaching you the way how to kind of protect yourself and get in a better entry way to get your take profits without losing on the stop losses as well. So this strategy is really good to assist you within that 90-day goal. For those of you who are going for those 6 figures, I know I'm in the works of doing the same thing. So use this strategy, play it on a demo, whatever you need to. If you have any questions, reach out to the team. We'll be happy to kind of go over it with you as well too, because we all want to win at the same time, and that's what we're here for. All right. So knowledge is a treasure, but practice is the key to it. As I said, if you have any questions at all, if you're still kind of lost on, putting in a buy stop, sell stop, limits, anything like that, use your demo account. Play with the scanner, use your demo account a little bit here and there. Chalk up the charts a little bit on your phones or on your PCs and just learn it. Learn it as you grow. And if you have any questions, please reach out to the team. We'll be glad to help. I hope this video is beneficial to you all, and good luck moving forward.